When I go closing costs, can you just go like this with the two bills?
Well,
That's it. And just actually drop them.
we're really gonna drop them for $2.
Yes, I think it's funny the fact that we only have $6.
They don't know it's even $6. We just pretend they're $100 bills.
All right, so today we're talking about closing costs.
Closing costs.
You were supposed to just do it.
Oh, there. All right.
Today we'll be talking about closing costs.
It'll definitely be more than that, but
A little more than that.
we'll get a little bit more than that. So what are they? So first, it's the cost really
To close.
to get into the house, right? So it starts with the first category or the first bucket. We're going to call them buckets because that makes the most sense. The first bucket would be your bank costs, right? That's the cost that the bank incurs or you incur to get the bank's loan. Bank, mortgage company, same difference. I'll refer to them as bank just because it's out of habit.
Right.
Second bucket is things you don't shop for. The things that the bank is gone out and picked out the vendor. Your appraisal, your credit report, your flood certifications. That's to check whether you're in a flood zone or not. Then you have things you do shop for. That's the options that you have to go pick out your own professional. Really, that's me, right? You're going to go pick out me, and hopefully you're picking me and not some other attorney, but you're picking me. But it's to pick your attorney. The next category is then, the big category is to taxes and fees, right? Really, you don't pay a tax on the buying side, but you pay to record a document with the town clerk. The town clerk is going to be the record keeper. They hold the mortgage, the deed, as a public record, so anyone in the world can go see it.
So, I mean, I want to actually bring it back to... Damn, here I go again. Never mind, continue. And then we'll bring it back afterwards once we get all the buckets filled up.
That's fine. So the bucket after the taxes is your prepaids. That's where you are prepaying for the next year, right, or the next period. So you typically here, if you have flood insurance, you got to pay a year up front. That's going to be put in that bucket. If you pay taxes,
you better pay taxes.
Right, but depending on where we're closing, you may not have to pay taxes. You may. If we're within 2 months of a tax period, the mortgage company is going to require you to pay the taxes.
Okay.
For the next 6 months, next 3 months, whatever the period is. And then the other one is homeowners insurance. Right. You also are going to pay prepaying the interest for the remainder of the month that we're in. So if you're closing on the first, you're going to pay for the full. For the most part, you pay for the full month. But
the good thing about it is that usually you don't have a mortgage payment until like a month and a half later or 2 months later. Or
right, and I'm going to defer to another video on that where I have a mortgage person.
I just wanted to say something. I haven't said anything in so
long. And then you have escrow, which is money that the bank is holding to have a cushion so they can pay your bills when they come up next.
Right, so they can pay your next tax bill,
your next tax bill, your next insurance bill. If you have mortgage insurance, your mortgage insurance bill. If you have flood insurance, your flood insurance.
So this is not really an expense. It's money you're putting aside for your next bill.
Right.
And if you sell the house in the future, that whatever's left over in that escrow account actually comes back to you, right?
Right, but it's still considered a closing cost. I want to make that very clear.
No, right. It's still in that category of closing costs.
Even though they're holding the money for you,
it is a fee.
It's a fee that you have to pay at closing. And then the section on the last bucket is what they call other, and that's if you have to pay a termite inspection fee, right, or a title insurance. You have an owner's policy and a lender's policy. I'll do another video with Gustavo on that, but just know that an owner's title insurance policy is an optional policy that's included in Section H, which is the optional. The other category I'm talking about.
Okay. All right. Cool.
All right.
Was that it?
And that's all of your closing costs. Then on the next bucket, the next big thing you have is reimbursements.
Okay.
Right. That's paying the seller back for expenses they've already paid on your behalf. Well, their behalf, but it's going to be yours now. Typically, that's your taxes, right? Because they paid through the end of the period. HOA fees, also referred to as condo fees or homeowners association fees. Those are the fees that the association takes to live there.
So anything that was paid up front by the seller, you need to reimburse for the amount of days that you're going to be owning the place.
That they've prepaid.
Right, yes, okay, yes.
Right.
Yeah.
And then fuel. So you're going to look at either it could be the fuel in the Typically it's oil, but fuel in the oil tank, or if there's propane and the owner owns the propane tank, the propane.
And that's something to keep in mind. It's actually really, really important, because if we walk into a house and it has a full tank of oil or even 3/4 of a tank, now you're talking about a lot of money that gets added on to your closing costs, because you have to pay for that fuel, because now it's your fuel.
Right, and think about it on a basic level. Those tanks are 250, 275 gallons.
Right.
Very basic math. You do
So
that by
I'll do the math.
by $2.
Okay, so 250 gallons. And how much is the oil right now?
I don't know the exact amount. Let's say $2 to make your math easy.
Yeah, you have to bring in like $400 at the closing table. It's a lot of money.
Yeah,
it's a lot of money.
Yeah. Try to add some more numbers to that. It's more like $500.
I know, I'm just messing around.
Right,
I need this on record, by the way. I was really just messing around. Okay.
All right, that's fine.
I know it was 800.
Yeah, but that could be a big deal to somebody, right? You plan for
absolutely
for $10,000 of closing costs, and now we find out there's an extra $500. It could be a deal killer.
Yeah.
Right, and you don't.
It just hurts, you know. It just hurts now, like just being hit with something like that towards at the end after spending money on your appraisal, on your inspection, on your whole closing costs, your down payment, and then on top of that, an extra $500 or whatever it is just gets thrown at you. Was that a ghost? Just gets thrown at you, and it's just, you know, it sucks.
And the toughest part about it all is that you can't find that out until the day before it goes. Right, because that number is going to change no matter what.
So if you're my buyer, right? So I need all the realtors to just cover the ears right now. Go ahead, I'll wait. Okay, thank you. So if you're my buyer, what we're gonna do is we're gonna actually turn up the heat when we go do the inspection. We'll put it at like 95 or something. We'll use up all the oil we can so that you don't have that fee at the end. I got you.
Yeah, except for you don't want to do that too, and then ruin your oil tank and ruin everything because you run out of oil. So.
We'll work it out. We'll
figure out a solution.
I can't do it with the attorney here in front of me. We'll work it out.
But a good rule of thumb is national averages for closing costs are between 2% and 5%.
Okay.
I use that figure, and for the most part, it's pretty accurate. The only time it's messed up is when you're in the higher price points, right?
Sure.
Like $1 million and up, it's different. I tell people 5% because I would like to tell you a higher number than a lower number, and then have you really happy with me when I come in at half the price, and now you have money to go buy furniture.
So what does that mean then? So that means you need your down payment, whatever percentage you're using, whether it's 3.5% for FHA, 3% for conventional, 5%, whatever it is.
Right.
And on top of that, you will have to have 2 to 5% for closing costs.
Right.
There are ways to lower that cost by getting seller concessions and stuff like that, and I'll get probably with somebody else. I'll get into that with at a later video. So I didn't mean to kick you out like that.
That's fine.
I need you to leave so I can talk about seller concessions, please. But all right, so does that pretty much sums it up?
I think that does a good job of summing it up.
So once again, I know we didn't talk about fees and stuff like that. I need you to understand that all these things actually vary from lender to lender, from attorney to attorney. So it's very difficult to talk about specific fees, or from property to property actually. So we just wanted you to know what actually means when we talk about closing costs, and that's what it is. So thank you for explaining that, man.
No problem.